Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. Another wild week for gold, lower. Gold hitting its lowest weekly close since early August. And it looks to me like if you go back to that September 8th launch point at around 1360, gold has really just dropped got down to about a low of 1278 today. Still holding above a key 1275 level that we've talked about over the last week or so. That's the level I think you no longer want to be long given where we started. So right now it's sweating time if you're long, but you're still in it because right now we're holding above that technical 1275 level. And the main reason we've seen gold come off, we had the Fed announcement, we had the Fed talking about higher rates and maybe the economy picking up and more rate hikes in the future and balance sheet normalization, and that all sounds good. But ultimately, right now, gold is losing favor due to the fact that rates could be going higher. We saw Treasury yields rally. We see equities holding on their all-time highs. And yes, the dollar itself has come off out of the basement and is threatening to rally as well. So a dollar which is starting to gather some steam if we can get a Fed that gets his house in order, if we can start to see the economic growth that we want to, that is all going to point to lower gold prices. And if you look at what the Fed's got right now, we're talking about rate hikes in 2018, and we're talking about growth, and we're talking about all this great stuff. But ultimately, it comes down to a new Fed chair. And today on Friday, we had whispers of a Kevin Warsh Fed, and boy, did the yields went higher, stocks went higher, the dollar went higher, and all that really forced gold prices down even lower. But ultimately, I think that is going to be the direction of gold. Will we have a hawkish Fed? Will we see inflation rebound, or will the Fed just shake it off and say, hey, inflation's not going to be one of our main directives anymore, at least in the short term, so we can get rates back to a more normal level? And that's really being reflected in gold. So there is no fear trade in gold anymore. A lot of what we saw on that rally was geopolitical, and that's kind of been taken out of the running. And right now it's really focusing on more the Fed and the dollar. And I think right now gold prices could be in trouble, but we are holding above key support at 1275. We'll have to take a look next week if we get there. We have employment, so a lot going on next week that could force gold prices into a more bearish picture. But right now it's been a big move from September 8th to where we are today. This has been Todd Colvin coming to you from the floor of the CME Group.